Thank you everyone for joining in. We'll wait for another 1 minute because it's the webinar starts at 4:30. So another 1.5 minutes for letting people join in, and then we'll start. Meanwhile, you guys, if you have any questions regarding Scope 3 emissions, anything that you want to discuss at the end of the webinar, please feel free to add into the comment section or the question and answer section. That should be available to everyone. All right. Let's get started. Thank you for joining in, everyone. This is the fourth session of the Navigating Net Zero series that we started 2 months ago, and and I see so many attendees, and this looks good. I hope you guys are able to find this series of webinar useful. Um, So in the previous sessions, we spoke about carbon accounting. We spoke about scope 1 and scope 2 emissions. We also briefly spoke about the BRSR. This is the fourth session that we are doing as part of this particular series. In the previous sessions, we spoke about the scope 1 and scope 2 emissions. We spoke about organizational boundary. We spoke about operational boundary. We spoke about direct and indirect emissions. In particularly, we covered direct emissions, that is scope 1 emissions and its subcategories. In case of indirect emissions, we have just covered scope 2 emissions till now. Today, we are going to cover scope 3 emissions, which is also indirect emissions. And we briefly spoke about the current status of scope 1 and scope 2 reporting requirements. Mostly, we touched upon how the regulations are framing up, particularly in the North American region and the European region. Today's session is primarily focused for the Indian subcontinent as well as the Middle East. And we are talking about scope 3 emissions particularly. So building upon the previous sessions, we'll quickly talk about the organizational boundary. Now we did cover this. I'm going through this again, more importantly, because this organizational boundary has got a relevance for scope 3 emissions as well. And you'll see why. Uh, to talk about the organizational boundary, we want to speak about three things that we covered earlier, which is the consolidation methodology, wherein we covered three methodologies, which is equity share, operational control, and financial control approach. Let me tell you again that this is all there in GHG protocol, and we are kind of reproducing this in terms of what the standard is. Now, talking about equity share approach, it is very straightforward. Now, when I say straightforward, this is all relevant from the perspective of the parent company or the company which is reporting their emissions. So in case there is a parent company which wants to report their emissions and they have a group company or a subsidiary or a joint venture that is part of their company, whatever equity share they have in those entities, the parent company would report the emissions accordingly. So in case if they have a joint venture where they have, let's say, 40% equity. So when they are reporting their entire emission at the parent level, they'll only report 40% of the emissions that is reported by the joint venture, right? This is a bit different when we talk about operational control and financial control. In this case, it is all about whether the parent company, you means the parent company, has an operational control over the entity or not. For an example, in case the same example over here, we can take supposedly the parent company has a manufacturing plant. Here in this case, it has a total operational control over this particular manufacturing plant, and that is why uh, the entire 100% of the emissions from this manufacturing plant will be reported by the parent company. On the other hand, if there is an entity wherein the parent company does not have operational control but might have an equity share, in that case, it will not report the emissions that is arising from that particular entity. Same is the case with financial control. So for an example, there is an affiliate company. The affiliate company will not be part of the reporting in case of uh, the parent company. In case there is a joint venture or a joint operation wherein I have, let's say, 30% equity and somehow I also have financial control, we will definitely report it as part of my emissions. Now, I am repeating this because this is also important in some cases when we are deciding which category to report our emissions in, and you'll see that shortly as well. Now, this is something that we've all seen. So this is the operational boundary wherein all the activities are listed for a particular company, and those activities are subdivided into scope 1, scope 2, and scope 3 emissions. In case of scope 3 emissions, they are further subdivided into upstream, downstream activities. Now, a very simple example could be when we are talking about a manufacturing company. If you are acquiring the material or pre-processing anything, before you bring it to your own premises, those activities come under upstream. So for an example, if I am manufacturing, for an example, buses, and I procure steel as well as plastic or aluminum, whatever I'm using as a raw material from some other company, whatever material I acquire, those are all upstream for me. Thereafter, whatever I do during the production of the vehicle is direct emissions, that is uh, part of the reporting company's own emissions. When I say direct emissions, that is direct emission with respect to the company's facilities and company's vehicles. Scope 2 emission is still considered as indirect because that is purchased electricity. Thereafter, there is the downstream activities. When I say downstream activities, these are once you have completed your product and you are shipping it out, for an example, you're selling it. So you're transporting from the manufacturing hub to a selling counter. So that particular activity will be considered as downstream activities. So this is a simple example that I took from the perspective of, manufacturing. So material acquisition and pre-processing is upstream. Production is part of the scope 1 and scope 2 emission of the company. Thereafter, downstream is distribution, the use of the product, as well as end of life treatment of the product. So this is a simple way of understanding the operational boundary in case of scope 1, scope 2, and scope 3, and in particular scope 3 emissions. Now, when we talk about scope 3 upstream activities, so we took an example of material processing. That was one of the example, but there are many such activities that we can consider as part of scope 3 emissions, scope 3 upstream emissions, right? Now here in this case, the first one is purchase goods and services. What the example that we previously took was of raw materials. So we are procuring or purchasing raw materials, and that comes under scope 3 upstream emissions, which is under purchase goods and services. We can also be taking services from someone else. For an example, if a company is doing environmental due diligence for me, that's a upstream activity for me. When I say me, I'm talking about the reporting company over here. So just for clarity, I'm saying that. Now, the second category is capital goods. Uh, the difference between purchase goods and services and capital goods, because we're talking about goods in both the cases, is in case of purchase goods and services, we are buying something for making a product, and ultimately we want to ship it or sell it to someone else. Whereas capital goods are products or machinery or furniture or equipment that we want to procure for our own use so that we can prepare something out of it. So for an example, in case of machines would use the raw materials and produce something out of it, a product which we can sell it to someone else or to a different company. So capital goods in so machineries, furniture, in this case land and building also comes under capital goods. So that's a primary difference between purchase goods and services and capital goods. Thereafter, fuel and energy related activities. So for an example, let's say we are using coal for certain activities of production within the company. But if coal is coming from somewhere else, or it is being processed, or it is mined and then processed and that comes to you, so whatever emission that goes into the processing of the coal would be part of scope 3 upstream category 3. Be mindful that these activities are not included in scope 1 and scope 2 of the reporting company itself. And we have already covered scope 1 and scope 2. I hope that we don't need to go back to that. So examples are mining of coal, refining of gasoline, transmission and distribution of natural gas, transmission and distribution and loss of electricity. So all of these categories come under fuel and energy related activities, scope 3 upstream. Thereafter, there is the upstream transportation and distribution. So for an example, if you are procuring the raw material would reach to you via a courier service, for an example. So whatever emission that goes into the transportation and distribution arising from the usage of trucks or ships or whatever means are there, those will be part of the upstream transportation and distribution. Thereafter, there is the waste generation and operation. So all the emissions related to disposal in landfill or incineration or waste to energy or wastewater treatment, etc. So it's very important to understand what waste generation and operation is, because sometimes people do confuse it with processing of the waste. So for an example, if supposedly somebody else is doing this activity for me and I'm not doing it myself, then it will be considered as scope 3 emissions upstream, right? So emissions related to waste disposal is something that is part of um, this particular category. Thereafter, business travel. So this is something that is being discussed a lot. People are talking about how to reduce business travel as part of the scope 3 upstream. So business travel is part of the upstream activities. So emission and transportation of employees for business related activities. And the important thing is that these are business travel related to vehicles owned and operated by third parties and not by own vehicles, because anything that is owned and operated by the company itself will be part of scope 1 emissions and not scope 3 emissions. Employee commuting by default comes under scope 3 upstream. So employee commuting between the home and the work sites. Um, Finally, the upstream leased assets, and this is a little bit complex, but in a simple way, the scope 1 and scope 2 emissions from assets leased by the reporting company. So for an example, if I am a real estate company and I have leased my asset to someone else, in that case, I would want the the emissions, which is scope 1 and scope 2 emissions of the lessee to be reported over here. So that will come under upstream leased asset for me. Hope that is clear. Um, are there any questions as of now, or shall I proceed? I see a lot of people are there in this call. People can raise their hand and I can clarify this. Sure. I see Mohammed raising their hand, Maitri as well. All right, Mohammed, I've given you access. You can go ahead and speak. I hope you have access. Do you have access, Mr. Moinuddin? All right, I don't think that you are able to speak. How about Maitri?
Yeah, hi. Can you hear me?
Yes, ma'am, I can.
Yeah, hi, Manshu. Good afternoon. So I
Sure.
need a little bit more clarification regarding this waste part. That you
Okay.
just mentioned that the waste which are being processed by the third party will be only the scope of scope three, right? Can you just little
Yes.
bit elaborate or emphasize on this?
Sure, absolutely. I mean, what part? I'm sure, for an example, I mean, in terms of the clarity of the operation, for an example, let's talk about a company which is, let's talk about your own company. Let's suppose say you are generating paper waste. Let's say you are a corporate company, you are utilizing paper waste, right? You're utilizing paper, you're generating paper waste. Now, in case a company and you've leased out the waste management to someone else, right? So basically, you've contracted someone else for processing that waste. Here in this case, the paper waste. So the company, the people from that company will come and take away the paper waste from you, right? So that would be considered as scope 3 emissions. So when they either they landfill that particular paper or they recycle it or they incinerate it, whatever emissions are generated because of those activities are part of scope 3 emissions. Is that
Okay.
is that clear enough, or
Okay.
do we need
So
to
if
get
I
into more
in case,
details?
yeah,
Yeah,
yeah. So
sure.
if I let's say I am generating plastic waste and I have put own recycling unit inside my premises. So my
Right,
own plastic waste I'm recycling and selling it out. So will it be
right.
under scope one, not scope three?
That should be primarily scope 1, yes. So any emissions that is coming because you're processing something on your own premises will be part of scope 1 emissions and not scope 3 emissions. Because here in this case, you are responsible for processing of that waste. You are responsible for energy usage in processing that waste also. Let's suppose you are incinerating it, right? So during the incineration, you are generating emissions, and those emissions are scope 1 emissions for you, direct emissions. Does that clarify?
Yeah. Okay.
Thank you. Uh, I don't see Mohammed. Shanur is also there. I'm sorry, I'm giving it some time because I understand that this may be a bit complex because the moment we go to downstream, people will have more questions for sure. I have answer as well. I'm trying to give. All right, Shanur, please go ahead and ask your question.
Yeah, my question is that suppose two you clarify regarding this waste. One is come to the scope one if we are in-house recycling facility. If are hiring someone to recycle, then it will come to the scope three. But if I don't know, suppose we sell to the someone, then I don't know they are recycling or they are reusing. So in that condition, what uh, it will come in scope three or not?
Uh, for sure, if you're selling it out, yes, you are. That will come under scope three for sure. It is not under scope one. If you don't know whether what they're doing with this, I mean, you can simply assume. I would assume that they are landfilling it for the sake of calculation, but they will, of course, if they are buying it from you, they'll definitely be recycling it. So it is better to use recycling if you are sure that they are buying it for a purpose. So if you
Okay.
look at the emission factors also, you will be able to clarify or use the right emission factor. So for example, in case of landfill, there will be, of course, more emissions. In case of recycling, the emissions will be less. So when you're accounting for it, your emissions will be lower.
Okay. So we need to incorporate that details, means
If you have,
recycling or
yes.
definition.
If you have, yes. Otherwise, you can assume whatever is the closest information available to you.
Okay. We cannot incorporate like assumptions that we are not means incorporating in this report like waste detail.
That's entirely up to you, Shanur. I
Okay.
mean, at the time of consolidation, there are, of course, a few things that you assume, uh, and I assume that waste would not be the top emitter in most cases, and at that point of time, you may decide what to do or not. And more so from the perspective of assurance, you should have more details
Yes.
when you are when you want to publish this data and you want to assure your data, you should have more information. Hope
Yes,
I've answered your
definitely.
question. Yeah.
Thanks.
Hi, Insa. Probably you can ask your question.
Hi, hi, good evening.
Good evening.
Yeah, so I was a bit confused for a long period between the scope 1 and scope 3 emission. So before going to my question, I will give a quick brief on our company. Like we treat FOG waste and we convert it into three end products. So the three end products are brown oil, water, and sludge. So whatever emission that goes because of this sludge, because comes out from this sludge, does it comes under scope 1 or scope 3? So I believe, as per your information, it will be under scope one because it's due to the activity from our company. So it will be direct emission or scope three emission. That make
Yes,
me.
if you are processing it yourself, whatever emissions are arising because of the process itself, as well as whatever electricity that goes into it, will be part of scope one and scope two. So purchase electricity or whatever electricity you're using is scope two for the process, and whatever emissions that are arising because of the process, waste processing plant, that is part of scope one. Anything that arises after your process, for example, whatever end products that are generating, uh,
Mhm.
that is taken away by someone else, whatever happens after that will come under scope 3 emissions.
Okay. Okay. Fine. That's clear now.
Right.
Thank you.
Thank you. Shall we proceed? All right. Let's talk about downstream scope 3 emissions. So similar way, and I think the questions that we've just been asked are very similar. So downstream transportation and distribution, I think this is very straightforward. So emissions arising from transportation and distribution of products sold by the reporting company to the end consumer. Here it could be another company or it could be a user. It can be anything. Thereafter, processing of sold products. So to answer your question, I mean, this is something that is also relevant to you. If somebody else is processing the sold product, here in this case, whatever is generated from your plant, and that is being taken by someone else to be used in their own premises. Uh, let's say it's a product which is it is of some use in another process, and that is something that is relevant over here. Scope 3 downstream category 10 will be something that will be utilized over here. So processing of sold products, and we have taken an example of Tata Motors in India for an example. Tata Motors utilizes Cummins engine in India. So for for Tata Motors, when they are utilizing Cummins engine and they are fixing it in their buses, this is something that will come as scope 3 downstream for them. For the reporting company here. So here in this case, reporting company for downstream, it could be Cummins. For them, it is scope 3 downstream. I hope that makes sense to people, right? Thereafter, we have use of sold products. So direct use of sold products, for an example, iPhones, automobiles, buildings, appliances, web-based softwares. So all of these come under scope 3 downstream category 11. Uh, it can also be an indirect use phase, like in case of apparels, when you are washing or drying them. So those come under scope 3 downstream. So if you are an apparel company and you want to talk about whatever goes into washing and drying your apparels after you've sold them, right? Those emissions also will be accounted as part of scope 3 downstream. Uh, Thereafter, we have category 12, which is end of life treatment of sold products. So anything in terms of uh, processing for the end of life of the products. For example, in case of batteries, they need to be properly recycled, or they should be processed before they are scrapped. So that definitely comes over here. Uh, Next is downstream leased assets. So emissions from the operations of assets leased to another company. Here in this case, again, it is the lessee's scope 1 and scope 2 emission that has to be included. So if I am leasing out the assets to someone else, their scope 1 and scope 2 emissions is my downstream leased emissions. And in the previous one, it was when I am the reporting company, as in I am leasing out from someone. So in that case, that would be upstream leased assets. Uh, Next is franchisee. So in case there are investments, or the franchisees um, that are part of the reporting companies, all these franchisees need to be reported as part of a separate category called franchisee, wherein the operation of the franchisee has not included in the scope 1 and scope 2 emissions of my reporting, and those need to be accounted over here, right? Similar is the approach in case of investments. Investments are also known as financed emissions. So the proportional scope 1 and scope 2 emissions of the investment that I do have to be reported by the reporting company. I see that Ansa has raised a question, raised her hand again. Ansa, please go ahead in case you have any questions regarding the downstream activities.
Hi. So, sorry for bothering you again and again,
That's all
Himanshu.
right. Absolutely all right. Please go ahead. Yeah.
So this sludge we send it to landfill. Okay.
Mhm.
So we send it to landfill. So, so does it really comes under scope 1? Because yeah, because this is a part of our activity. Yeah. We treat the FOG waste and we convert into sludge, and the tankers will come and collect the sludge again, and they will send it to landfill. So does it really comes under scope 1?
No,
Like
that's what
that.
I said. Anything outside your premises or anything that you are not doing it yourself will come under scope 3 emissions and not scope 1 emissions. So only till the gate where you are processing the product, right? Whatever emissions are going in that, in that process will come under scope 1 emissions. Anything beyond that will go under scope 3 emissions, right?
Okay.
So
Okay.
that's how you should look at in terms of scope 1,
Mm,
scope 2, and scope 3.
okay.
It is a little bit complicated, and
Yeah.
but once you um do it step by step, for example, you talk about first the organizational
Mhm.
boundary, and then you talk about operational boundary. All of these activities fall into place into the right categories, and the reporting also becomes very easy.
Okay.
And when in doubt, you can always go back to GHG protocol and consult the document. It's very comprehensive and with examples.
Okay. Thank you.
Hi Samta, you can also go ahead.
Hi. For example, for cement, if a cement is produced and a real estate company is using it in construction, so the emissions while the in use of cement would be scope one emissions for the real estate company and scope three emissions for the scope three downstream emissions. Understanding that correctly?
Uh, in case of cement, if you are producing the cement and you are the reporting company, for you it is downstream emissions, right? Uh, in case of me being the real estate company, let's suppose say I am the real estate company and I'm procuring cement from you. For me, it is upstream. It goes neither in scope one or scope two. Rather, it is upstream or downstream emissions for these activities. On the other hand, if I am the company which is producing the cement, in the process of producing the cement, whatever goes into the process has to be scope one emission for me. I hope that makes sense.
Yeah, that does. What would be scope one emissions for a real estate company who's into
For
construction?
for a real estate company, whatever they are using for the construction activity itself. So anything, for example, purchase electricity, or in case of they're using diesel, uh, those things will go under scope one emissions, right? Scope one and scope two emissions respectively, and the raw material will be part of scope three emissions. In this case, for them, it is upstream scope three emissions. So purchase goods and services, if you remember, we spoke about purchase goods and services, and that's something where I'm procuring the raw material for my own use. So it'll be considered there.
Thank you.
Hi, Moinuddin. You
Hi,
can please
Himanshu.
go
Hi.
ahead. Yeah.
Yeah, I just got a bit curiosity regarding this scope 3 upstream and downstream. Aren't we duplicating the emissions because one upstream for one company will be the downstream for another company? So if both are
Yes,
reporting it,
in some cases, yes. But if you look at it very carefully, you will see that they fall into place very easily. For an example, let's talk about upstream and or downstream leased asset. It is all related to the organizational boundary. So if I am the owner of the asset and I'm leasing out my asset to someone else, so when I am the owner of the asset, uh, everything that is coming under uh, of the operation of the asset will either come under scope 1 or 2 emissions or scope 3 emission downstream basis the methodology I have chosen for consolidation. Okay. So it will never be duplicated. So if I have operational control of my asset, and at that point of time, I will report it under scope 1 and scope 2 emissions. If I don't have operational control over my asset, I still am the owner, but I don't have operational control, that will go under scope 3 downstream. So it will never be duplicated in the same category, to answer your question.
okay, okay. Just for example,
So
the this
yeah,
what the example you have taken this cumin engine. Okay,
yeah,
this cumin engine sold to Tata, correct? Here the
correct.
cumin is selling their engine to Tata, so it is upstream for cumin, correct?
Um, No, it's not upstream for Cummins.
And
It is
downstream for
scope.
Tata.
It is scope one for Cummins, and downstream in
No, I'm
terms
talking
of.
about the transportation, scope 3
Okay.
for Cummins. The engine manufacturing definitely scope 1 for Cummins. I'm
Yes.
talking about the scope 3 of Cummins while transporting this engine to Tata.
Yes. In this case, so if you look at the categories itself, I think they are self-explanatory. So you are breaking down all the activities. So entire Cummins engine is not being, so everything related to that is not being accounted for, right? So
Yes.
transportation and distribution downstream is something that is reported by, let's suppose I am Cummins and I'm reporting the transportation and distribution. So that is coming under scope 3, category 9, right?
Yes.
Similarly, for Tata, if I talk about transportation and distribution itself, it will report the same thing under upstream transportation and distribution, right?
Correct.
So
Yes.
yes, there is a duplication, but in the right category. Nobody is saying that it is the same for me, right? So it is well
Okay.
accounted for. And since this is a nexus, you cannot avoid it, to be very honest, right? You
Okay.
cannot say that I am isolated from everything, and which is why the GSG protocol is very important,
So
such that, and which is why it is reported under scope 3, such that you're not entirely responsible for it, but yes, you're accounting for it,
okay.
and you take partial responsibility of reducing it or offsetting it through activities,
And it is
right?
responsibility kind of on both the partners or both the sides, we can say.
Right. Like for example, in case of downstream or upstream leased assets, if I don't have operational control, I will not be talking about reducing them or your
Correct.
offsetting them in any way, but
Yes.
I will certainly be able to influence it. That is why it is important to account for, such that I can take a decision, I can look at my decarbonization strategy, and I can further, take action and reduce my emissions.
Okay. Thank you.
Right. Hi, answer.
Yeah, yes. Hi. Sorry, I mistakenly raised my hand. Sorry.
All right, sure. Let's move ahead. I think we are already ahead uh, of the time. Um, all right. I think we've already covered the example of the upstream or downstream lease asset, wherein I'll just quickly summarize it. So here in this case, for example, if I have operational control of the assets and I am the owner of the asset, and the tick mark over here represents that I am. So we are preparing the report for this particular company. So this is the reporting company in this case. If I have to report it, I will report it under scope 1 and scope 2 emissions because I have operational control over this particular these assets. In case I do not have operational control, I will report it under scope 3 downstream lease assets, right? Similarly, if I go with a financial control approach or an equity approach, uh, it has got a similar approach. So for example, if I have financial control over this particular asset, I'll report it under scope 1 and scope 2 emissions. Else I will report it under scope 3 emissions, right? Same is the case where with let's suppose the lessee. If I am if the lessee here is the reporting company, and I do not have the operational control in some case. So if I don't have the operational control, I'll report it under scope 3 scope 3 upstream lease asset. Here in this case, for an example, I don't have operational control, so I am reporting as scope 3 upstream lease asset. Whereas if I do have operational control, then I will report it under scope 1 and scope 2 emissions. So I think that is pretty clear with respect to what we discussed earlier as well. Let us quickly discuss the various challenges with respect to scope 3. Of course, we have already covered, but there are certain scenarios where it is understanding the right category to fit in the emissions is very difficult. So for example, processing of sold product is very difficult to understand. How to account for it is very difficult. Upstream and downstream lease asset we have just covered, although it is pretty straightforward, but there are cases where someone might get confused in case of the type of leasing. So if it is a financial leasing or it is an operational leasing. So in case of financial leasing, everything will be decided basis the consolidation approach that we have taken. So if we have taken a financial consolidation approach, then everything will be decided based on whether or not I have financial control or not over that particular asset. Um, it is important to understand that we have to do proportional reporting. Like for example, in case of equity share approach, only the portion that is part of my kitty has to be reported when we are consolidating all the emissions. So that's very important. Here in this case, it is category 15 investments. That is one of the example wherein I talk about the proportional reporting of the emissions. Scope 1 and 2 versus scope 3. So we have already seen in many cases we have to the emissions that we are reporting goes either under scope 1 and 2 emissions or scope 3 emissions basis the relevance, right? So choosing the right category is very important over here. Um, Thereafter, data collection. I think having done this myself, I know scope 1 and scope 2 data collection itself is very difficult. And talking about scope 3 data collection is very difficult for sure. And if you have more number of assets, it is a nuisance to collect the data. Um, in many cases, the stakeholders that you are going to collect the data from do not have this as their priority, and it gets even more difficult for data collection and then reporting. Lastly, the continuous monitoring. Of course, scope 1 data, even if you do collect it, monitoring it over the years is very difficult. Um, let's quickly talk about the scope 3 disclosure requirements. And we saw that in many cases, scope 1 and scope 2 are mandatory. Here is a list of top 50 let's say top 25 largest economies. When we see the top 25 largest economies, 12 out of the 25 economies have mandated scope 3 emissions. They need to be disclosed for all the public companies. And out of the 12 countries that have already mandated, these were mandated, at least three countries were mandated during 21-22, and nine of these countries have mandated such regulations in 2024 itself. One of the country is expected to come out with the regulation in 2025, which is South Korea. So you can see that at least for the public companies in these economies, scope 3 is very essential. Uh, One might say that, okay, this is something that only public companies have to adhere to or account for and report. But when we talk about private companies also, they are kind of governed by their investors. And this is a list of, let's say, top 50 investment firms, and all of them are number one reporting their scope 3 emissions, and they are mandating all their investments to disclose as well as track their scope 3 emissions. So it is not like if you're a private company where you're never going to disclose scope 3 emissions. So it becomes very important for companies, no matter where they are in the value chain, to start accounting for their scope 3 emissions and eventually report it. So, and this is where I think we come in, or companies like us, we help you report or even before report account for your emissions, the scope 3 emissions, take in the right data for the right categories, and then track it over a period of years so that you can report them, track them, and ultimately reduce them or mitigate them. So that is our strength. Tackling scope 3 is our strength, and you can book a demo for the Sustainium platform, and we'll help you understand how you can do this for your company. I hope the session was useful for people who have attended to understand where to put in the scope 3 emissions, which category to use, how to do the accounting. And if people have got any further questions, let's hear from them and try to close it as soon as possible. I have Mr. Kannan
Yeah,
as well
hi.
with us. Uh, Sorry, who's this?
This is Moitre. Yeah, again.
Hey, Maitri. Yeah, please go ahead.
I have put a question in the chat box. Actually, just I need little bit clarification that when our industry, I'm giving an example of iron steel industry, we produce lots of waste, or sometimes we call it a byproducts like slags,
Mhm.
right?
Yeah, yeah.
And World Steel Association gives a credit when I sell these slags to others under scope 3, right? So it is a sort of waste. Uh, So this credit is applicable to all other waste, or it is only applicable to this byproducts, which I can call as a byproducts. Is there is a differentiation?
Sorry, ma'am, I'm not aware of WSA giving credit. I think that is something new for me. From the perspective of the scope 3 emissions, of course, anything that loses, it goes away from your premises has to be counted as scope 3 emissions only. But I think we can help you out in understanding where to put it exactly, and probably we can, schedule a call and we'll help you out in how to position it or where to account for it, if that is okay with you.
Okay.
Yeah. I'm saying this because I want to understand the entire scenario and then suggest rather than, giving a straight, blank answer. Just from
Yes,
the perspective of
absolutely
user
correct.
protection.
Actually,
Yeah.
different methodology giving different things. WSA gives this credit, but GG does not give this credit. GG protocol.
Sure, sure. Let us
So there a
understand
little
that
bit
and then
confusion.
answer.
Yeah.
Sure,
Okay,
absolutely,
fine.
ma'am. Mr. Kannan, please go ahead. I hope you have. Um, yeah, the mic is enabled for you as well, sir. Mr. Kannan. Sorry, we're not able to hear you. Probably you can, write back to us, or you can send an email to me and I'll answer your questions. Right, if there are no further questions, we'll conclude this session. Thank you everyone for your attendance, and we'll keep continuing to produce such content. Please do write to us, and in case you want us to produce specific content related to carbon accounting, or if you want us to, cover a particular sector, we'll definitely do it for you. Thank you. Have a nice evening.
Thank you.
Thank you. Thank you very much. Bye.
Thank you. Thank you.